Hey guys, and welcome to this new episode of Simple Crypto. Today, we're gonna explore the question why crypto is crashing. I know it has been heavily discussed since yesterday and today. The markets have been red, and there are a lot of speculations on social media, on X in particular. And in this video, I want to explain you the two main reasons why this is happening. And I also have a third bonus reason, basically, what is influencing the whole markets. But there are two main reasons for crypto crashing. And let's move into this topic. I posted, and this didn't age very well, I posted yesterday this here where I said a God candle seems to be coming. You read it here first, and Bitcoin looked super bullish. And I mean, look at the chart here on the left. It's just insanely bullish. And it didn't take more than a few hours, and Mr. Pepe was tagging me. Shout out to you, Mr. Pepe, for this, tagging me in another chart and said, like, is this your bullish chart? And obviously, this is what happened next. So after I posted this, and it looked super good, some hours later it dumped, and probably Mr. Pepe bought up there on the top, and so he got a bit salty that it didn't happen like I told him. I'm not giving financial advice here, and I think that the picture hasn't changed. So despite this dump that happened yesterday evening and today, we are still completely on track of this bullish formation that many people have been showing. So when you are new in crypto, you should get first, and I think that's the very first step in this industry, in this market, to get used to volatility. Volatility is very strong, and maybe you have been following my channel for longer. If you did so, you could probably remember this here. It's from 1st of February 23, when Bitcoin was at $22,000, and I said the $1 million signal just flashed. Maybe you remember that. And what I meant was actually the Heikin Ashi chart on the monthly. And the monthly Heikin Ashi is something that predicts long-term trends. You see, we went down here for a whole year, basically from December 21 until December 22, we had a series of 1 year of red candles. And then we had this extremely, like from the books, basically, this candle down here, which is the most beautiful bottom candle that you can imagine, with this very, very long, short body and the long sides down and up where the price moved during this month. And this was January. 1st of February, exactly after this closed, I said that this was the signal for Bitcoin to raise to the next level. And this is exactly what happened since then, as you see here on this chart. This about the volatility, but let's move back to today's topic, and we have to discuss what has happened yesterday. Short answer would be more selling than buying, as Captain Obvious, I mean, the economists would say, if there is more selling than buying, price goes down, right? But is this true? And this question is a bit deeper, but on a certain market, there has happened more selling than buying, obviously, because otherwise it wouldn't have dumped. However, that doesn't mean that in total there hasn't happened more buying, and I will explain you in a moment what I mean with that. So we can ask also who is selling and who the hell is selling. I mean, look at what I showed you just before. Look at these long-term trend candles. It's building up so beautiful on top again to go to the next higher level. So who would sell at this point? And the answer is also somewhat surprising, because it's a lot of people who are actually bullish. And bulls, like the really insane bulls, actually, those who are ultra bullish, many of them have been selling, not because they want to, but because they need to. And what we saw was a so-called long squeeze. So a lot of leverage, and I make this big again for you, a lot of leverage has been taken on Binance here. I mean, it probably doesn't look much different on other exchanges, but a lot of leverage has been taken because people have gotten insanely bullish, at a similar time when I showed my my post on X with the God candle coming. This was when a lot of people were ultra bullish and said, hey, let's go long and let's just borrow money to go long. So people went in and they didn't just take the money they had, but they also borrowed a lot and went long on leverage. And if you do that and the price moves down too much, you put your short loss below it, and to cut the losses, you actually need to sell the Bitcoin, because you have your stop loss, you're going down, you're losing value of your portfolio much faster because you are multiplying with leverage. You're not only winning when it goes up, but you're also losing much faster. And then you need to sell. And this high leverage in the market made so many people to sell that it cascaded down to this level where we are right now. So this is the market reason. On the other hand, we have the ETFs. And that's what many people think is strange, because we have an ETF which has so many inflows. It has been consecutive 19 days. We read today that these American ETFs had 9-digit inflows. So most of the numbers here are actually, some are smaller, some are 8 digits, but most are 9-digit inflows, with here 886 million on just one day, and all the other days as well, insane amounts. And why does this not keep the price up? And the answer to this is also it's pretty interesting, actually, because ETFs, they're buying huge amounts, and they're not buying where you and me are buying. They're not buying from these order books. They usually buy over the counter. And when they buy OTC, they don't really move the price immediately. So they buy these Bitcoin from the back-end holdings of Coinbase. I believe in America, a lot is bought through Coinbase, but also through other crypto exchanges and through big holders. Other parties are selling this to them, and they're not putting this into the order book, which is why it's not influencing the market directly. So miners and exchanges mainly do that, and they only need to buy these Bitcoins when they need them back at another point. Maybe they have some reserve, like miners had a lot of reserve. They're getting less and less these reserves because of the time that has passed since the halving. But generally speaking, these reserves are not immediately booked like in an order book, which says that this is something that takes a bit of time. So while we see something very emotional happening here, fast movement, this movement is taking some time to get into effect, which is why we do not see this compensate the sales. And Yeah, there is one bonus reason I said before. If you have seen the economic numbers recently, you know that inflation is not as good as thought, and interest rates might stay higher for longer, and the markets just don't like this. In general, stock markets don't like it, crypto markets don't like it. So yeah, we have these three main reasons. And yeah, this being said, I hope you learned something again today. I'm trying to share some really good knowledge here, not something that everybody is talking about, that all the media is talking with headlines. I'm really trying to bring you some deeper information from this crypto markets. And this being said, I hope you enjoyed this video, and I hope I see you again next time. I wish you a wonderful rest of the day. Your Alex.